Hi everyone. In this video I want to talk about Baba and how you can use the chopstick pattern to trade Baba. I also want to discuss this roadmap I had drawn up around February 8th after its earnings. I had received a lot of questions from people holding Baba through ER. They had probably just bought it that day and hoping it would gap up on some kind of great earnings. But the reality is you take a lot of risk when you just buy it the day before ER or the day of ER. So a lot of people were wondering if the price would recover so they can recover their money. I got enough questions that I drew up this roadmap. And so I want to talk about that. And then I kind of want to go back and talk about the chopsticks and how you could have traded this more effectively. So what Baba was in before ER was clearly a downtrend channel. So you can see here the downtrend channel, and it was right in the middle of the channel. So there was not a lot of strength going into ER in the first place. And second of all, it was already in a downtrend channel. So what I've mentioned to you guys before, whenever there's a trend line or support and resistance and it breaks, or breaks down or breaks up, there's always going to be a retest of that line. Okay, again, not always. Nothing is always in the market, but there's going to be a retest of the line. So in this case, you got a lot of dip buyers here, probably thinking this is such a great deal. They bought it up, and it closed up on the top half of the day. But the subsequent days continue higher, trying to regain this downtrend line. But you see that it didn't even get to touch it, so there's a lot of weakness here, and any rallies were being sold off. So in terms of my map, what I was looking for was what was the last swing low, and it was right here from the October 2014 low. Oh, and I kind of just drew the line across here to see where support might be, and since we were in this area relatively close to the support line, I figured we would probably hit it in 1 or 2 days after and get a rally possibly to this trend line again here. Now once you break a line, if it was support before, it would become resistance, and so that's why I drew this line to resistance, and then we would drop back down to a downtrend line. Now how I got this line was a clone of this line, and I moved it out to kind of meet up with the support line here, and that gave me a secondary channel to work with. And so I thought we would bounce off this channel and retest the line. Of course I would expected it to fail. The reason I expected it to fail was we had a March 18th lockout expiration here. This has been a recent IPO. So when there's a lockout expiration, the people who were prevented from selling, if they have any smarts, would at least sell some of their shares and turn their paper profits into real money, hard cash. So I had no idea how many shares would be sold this day, but in general, it would be a lot of shares in when lockup expires. So you got to remember, the market is all about supply and demand. And when you have a lot of supply and not as much demand in this case, most likely the price of the stock would go lower. So using this downtrend line, I kind of just projected that by March 18th lockout, we would get to this point here, which is in the 76, 74 area. Now, what I didn't realize was how much shares would be unlocked here. And if we take a look at this headline here, it says Alibaba says March 18th lockup expiry will free up 437 million shares. That is a lot of shares. If you take a look at Baba's average daily volume, which right now is 16 million shares. 16 million shares. So you're looking at 28 days of volume in one day. Now, not everyone will sell all their shares, but that is just going to be a huge amount of supply. So hopefully someone's got about $38 billion sitting around to buy up all these shares and support the price of the stock. I just don't think that's going to be the case. So now that I see that there's that many shares, I would suspect it may be going a lot lower than here. Having said that, after all those shares are somehow absorbed, so we're going to see a lot of downward pressure here until all those shares have been absorbed, all the selling is done, and then we might be able to get a rally. And we might be able to rally back into this upper trend channel, and then go ahead higher towards Q2 earnings. This side of the chart may be a little bit optimistic considering market conditions at this moment, but it's just something that could happen, and really it's just a lot of shares coming out into the market. So if we drop down here, it might be just a rally up to here, and then just kind of consolidation until we go into the next earnings. So that was my roadmap, and that was my thinking in the roadmap. But so let's take a look at what actually happened. So in reality, after this gap down, it didn't go straight down. Stocks don't go straight down and they don't go straight up. So there was more of a sideways here, and then creating this new downtrend line. But eventually it did hit down to the swing low, which is this line right here. And just as expected, we had a rally, a huge bullish candle here. But I wasn't buying into this because I was looking at this downtrend line, and I was watching to see if it would actually break, and unfortunately it didn't. The next day you had resistance here, and it was rejected. So ever since then it's been heading lower. Lockup is coming pretty soon, so I would say that if price started dropping below this level here, 79.95, 79.99, would be good to short the stock, considering the lockout would be in a few days. So the roadmap is so far working pretty well. We got the rally here. We did come down to the swing pivot. What happens after here? Only the future will, only time will tell. We'll have to wait and see. We'll have to see how it handles the lockout expiration. But I want to go ahead and talk about using the chopstick pattern to trade this. A lot of you guys really love IPOs because you see the headlines that the stock gapped up 60%, and you want to get in on the action. You want to have your money double or triple in a day. The reality is only the private ventures, the venture capitalists that invested when they were private companies, they're the ones that are making 60%, 80% profit on the first day. So there's really no rush to jump in on an IPO on the first day. There are plenty of time for it to develop an IPO base from which you can buy at a lower price usually. So if you look at IPOs, you'll see that most of them will pull back, give you a better price before heading higher. So let's take a look here. Here's the IPO day. Went up all the way to 100 and pulled back to 93. So a lot of volatility as expected on an IPO day. And it over the next couple of weeks, it formed a nice downtrending line. The slope was not very was a very shallow slope. But here, if you drew the downtrend line, which is key to the chopstick pattern, you would see here was the first day it attempted to break out of this line, creating a high right here above the trend line. And that day was rejection, and it failed. And it continued lower. And then on this day, we got a little bit more solid candle here, closing above the downtrend line. So with the chopstick pattern, you would find a high right here. You would typically wait for it to create a high. But since this point here had already breached the downtrend line, you can use it as a buy stop. And as you can see on this candle the next day, as it tried to get above that point, that price point, around 90.38, it got rejected. And the rejection also kind of shows you and kind of confirms that there's resistance here. And once this resistance is broken, there's a high probability that the stock will continue to advance. So if you set your buy point here, in a couple of days, you can see you caught the move and the stock advanced rather quickly. And if you pay attention and watch the stock here, and you see this kind of a candle, for me would be a sell signal because of the increased volume. There's huge volume up here. Okay, there was a dip down and a huge volume to bring it up. But the following day, you got almost as huge volume, a break of the low. That to me would be, raise my stops to this point here, and then try to get better prices. And as you can see, eventually it did break down. So the sell signal here would have been this bar for me. Now, when you get out of this trade, the next thing you want to look at is to get back into the trade. Now, because of this astronomical move here, everyone's interested in buying buying the dip, hoping that it will continue up another 50, 100%. And unfortunately, stocks don't always behave that way. It's better to be patient. Once you see that it's starting to pull back, what you want to do is make sure either, number one, it goes back and breaks this high immediately, which is a good sign of a strong stock, which you see here. Okay, for example, you get a pullback, but within 3 days, it's already making a new high. Now, when it pulls back and 3-5 days, it hasn't made a new high yet, then I would consider that being in pullback mode. And I would look for it to either try and go back to the new high or make a lower high, and then continue lower. So in this case, Baba was making a lower high and then continue lower, made a lower low. In which case then you can draw another downtrend line immediately off of this high. You connect these dots here, and there you have your downtrend line as a guide for you. And as you can see, and you don't want to buy when price is below this downtrend line, because what happens is it can continue to make low and a lower low, and you don't want to try and buy it. So you have this downtrend line, so you're going to look for it to kind of peak above the downtrend line here. And I've talked about this in the past, that once it crosses over the downtrend line, this is an aggressive entry where you can keep yourself pretty close to the stop here. But aggressive entries have a higher tendency to fail because you have not made a higher high. Okay, so in this case, if you entered here, it would have made a high here and it would continue to fail. So, that's the risk you take for an early entry. The safer trader would wait for the high here to pull back and then see if it has the strength to really break into a new high, and that would officially end the downtrend. But in this case, it didn't. So the aggressive trader may have lost some money by putting stops in this area, okay, where there was seemed like there was support, or here where there was a low. So even if they entered here, they have limited their losses to this level at max. Okay, but the safer trader would have waited for a break of this high and would never have entered into the trade again. So if we could look at this, even though there was a breakout, it failed. And if we continue to look at the chart here, it continues to make a lower low, a lower high, a lower low, and here it almost made a break higher, but it didn't. It failed. So again, we have, this is not necessary. This is a pretty even high here, but to me, even would be considered a lower high. And after ER, the gap down. So that's kind of how Chopsticks would have helped you trade it this stock. The sell signal is something that's you really have to master. It's really tricky. But if you were lucky enough to get out here, you would have avoided these highs. If you didn't get out here and you see it making a lower high, you should definitely have sold in this area. But the other point I want to talk about is people always ask me, why is it that I'm buying the highs? Because I really never know. I can look here and say, hey, this is support from this area right here. This is support, and I'll buy it. And you would have been right for a day. You would have been right. It rallied. And if you're a quick trader and you take profit here, awesome. But you see it makes a high and a lower low and a lower low and a lower highs. So when I wait for it to break out above highs, I'm waiting for it to kind of have a better confirmation that it's in a confirmed uptrend. And then I want to catch this type of move over a period of time, a period of weeks or even months. I don't want to catch these one-day trades. It's just too hard unless you're really nimble and you know what you're doing. But I'd rather just buy and hold as long as I can and make, let's say, from here to here would be about 30% profit. That's the kind of move that I want to catch. And I want to avoid this kind of falling knife situation by buying the highs. Now, what's going to happen here is you got the downtrend line here. You're probably going to have to extend it out here. Wait for the break of this line, and let's see if a new chopstick pattern develops when it gets into new high. I think we're going to have to at least wait into the next earnings, where it's probably going to set up as a chopstick pattern, but it's going to force you to hold through ER again. If that's the situation, I wouldn't hold it. I wouldn't buy it on the chopstick pattern. I would wait for ER. I'm a reactionary trader, I don't predict, I don't guess. I'll guess in terms of talking to people what's going to happen, but I don't trade it. I wait to see what the reaction is, what the results are before I enter the trade. So anyways, that's the Baba chart, and hope that was helpful to you guys.